What's going on, everybody? Welcome back to the channel. In today's video, we're going to be breaking down a short position that we took on NASDAQ yesterday, which was Thursday, December 14. It's an awesome almost 10-hour trade if we PT'd all the way at the bottom. My first targets were a little higher. There were one, I had a target here, a target at the gap fill here, and then lastly there was a target at the bottom here. But overall, 1 to 8, 1 to 10, almost risk to reward. This trade was almost never in drawdown, and of course it was live traded both in our Discord and for free in our Twitch stream. So make sure you come and tune in because you're missing out on, it's a little free money. So let's talk about what I saw in this trade, why I like this trade, and why I took this trade. So first we're going to talk about Wednesday we had FOMC, but this really strong rally. As you guys can see, we had this push from almost 2% from the lows all the way up to the pre-market highs, and then we had this consolidation in Asia and London session, and then this is the 9:30 New York open here. So of course I was going to mark my levels, my key levels in the pre-market, which would have been pretty much this whole area right here from 1661 to right about 16655. That's the area I was watching for a potential rejection area with a stop loss above it. So I saw that we hit it at the 10 a.m. key, right before that 10 a.m. key time. And then you guys remember we have two key times when we're trading, or at least the way I trade. I'm not saying everybody does, but it's around a 10 a.m. reversal and then the 1 p.m. reversal. So around those times, I tend to look for potential rejection plays or bounce plays, and pretty much a reversal trade depending on the market conditions are looking. And this is how the Nasdaq was looking. So we had this little pump from 9:30 to all the way to 9:45, 9:55, and I saw multiple rejections at this key area, and feeling that with a strong, almost a 2% push, more than likely a pullback was incoming, especially when we're looking at the higher time frames as well. Decided to enter short right before this big red candle, risking that new high, pushing for a new high with the pre-market candle close above it. Targeting the first target would have been this lows that we had, is pretty much equal lows at the market opening in the 7 a.m. candles, and then looking for eventually the whole gap fill, which would have been right around this key area right here. This would have been a gap fill right here, and then this of course had a bounce and then looked for lower. I had this question when I was trading live. Is like, why did you feel like, this is a question that one of the traders asked us, so I thought it's more likely it's other people are going to have it, so I want to answer it on the video as well. So we had this support here, right, the equal lows here. People were like, hey, why did you know it was going to break through and not go long in this area? The reason is that not all supports are created equal. A 5-minute support that bounced on twice is not going to be that strong. So if I have a really nice entry, right, on a higher time frame where I'm looking at a higher time, so this is the whole time I'm looking versus this is the time that the support was created in, right? I know that if this area should have more influence in the market correction. Now we might get a small bounce in that support area, which we did, but it was quickly brought back down. And if you have a nice entry, even if it does bounce, even if it did bounce, it will just hit my stop loss potential break even after taking one partial profit. And also is why we take partial profit at potential bounce area, because in case it does bounce, at least I took some money out and ended up being green anyway. Then we made a new leg higher, and of course the gap fill came. The gap fill actually gave a great short setup as well once it bounced. Here, let me clean this up. So we had this, right? We had the gap fill, and look where the gap fill ended up bouncing to. These would have been a trade on its own. Remember we made that 5-minute support and resistance area we just talked about? Guess what happened? Right before 1 p.m., right? We got that bounce, 12:50, right before that 1 p.m., right? Is retesting that previous support, which very basic stuff, guys. Previous support, got resistance now, right? Enter short there. You can enter short. The trend is down anyway. The daily trend is down, so a pullback is to be expected. And then looking for a bounce to short. If we pull our fibs, and I keep pulling the wrong thing. If we pull our fibs, guys, you're right into also here. The halfway retracement from the move down, and then that could have been a potential entry short on its own. Right, let's say you missed the morning one. Stop loss above the golden pocket, give it a little room to breathe. Targeting maybe the TR pocket down here from this move, or you can just lows right down here, which end up hitting and then bouncing back up for. Could have been an almost 1% trade on its own right there. So that was pretty much what the trade was about. It's pretty much understanding where your liquidity was. In this case, it was up here, where your potential targets are, and having confidence in your plays. Also, if you look at the 12-hour, just to zoom out a little bit, I have to go even further out to show it. Look where we're at, right? The all-time highs resistance. So what's the likelihood of you breaking past the all-time highs on your first test once you're back at those levels? It's not going to be extremely likely on the first try. So you have that resistance as well that you're looking for. Let me remove this magnet. There you go, right there. So we had this resistance right here. So with all those things combined, it gave me the idea to decide to go short, and it was a great trade. Everybody made money in the group. It was never set in drawdown, and that's important of understanding when to look for the exact entries. A lot of times in trading, is like you can have the right idea. So let's say I have the right idea that's like, hey, I think today's gonna be a red day, right? I'm gonna go short, but then I enter short right here, right open, 9:30 enter short. This move higher and holding a drawdown will mess you up. Will make you think like, oh shit, maybe I was wrong. Close the trade red, and then you end up being right. So just because your idea is correct, you also have to look for the exact levels where to execute your ideas, because it's almost just as important as the idea itself because of those emotions. Because if you can limit if you can get a good entry, you're gonna limit your emotions, right? Because you have to stress, you're not worrying, you're not seeing that big red P&L. So make sure that whenever you're trading, focus on the execution as well, especially with options trading, futures trading. When you're trading on leverage, extremely important. Anyway, hope this video helped. As always, leave a like, subscribe, and peace.